Hello, everyone. Welcome to this edition of Finacle Inspiring Better Banking Wealth Amplified series, where we are privileged to engage in conversations with the trailblazers of the global financial services industry. My name is Abra Roy, and I lead the wealth management practice in Infosys Finacle. And I'll be conducting a host of interviews around the wealth management and capital market space. With each dialogue, we look to discover transformative insights, exchange best practices, and unlock learnings from the experience of our esteemed guests. We are so happy to have Mr. Sundaram Ramamurthy, MD and CEO of Bombay Stock Exchange. And for the benefit of our global audience, I would just request Mr. Sundaram to kindly introduce himself. Over to you, sir.
Thank you, Mr. Abra Roy. Well, my name is Sundararaman Ramamurthy. I am MD and CEO of BSE, as you said. To put it very short, I have been working for the past 40 plus years. In that 40 plus years, 20 years were with National Stock Exchange. Before coming to National Stock Exchange, I was working for Indian Overseas Bank, State Bank of India and IDBI, the Development Financial Institution, wherefrom I came to NSE as a part of the core team which came to set up National Stock Exchange. I was with NSE till 2014. In 2014, I moved to Bank of America as MD and COO for India and was with them till the end of 2022. Jan 2023, Jan 4 2023 onwards, to be very precise, I am with BSE. That is a very short introduction of myself.
Thank you, Sundar, for that. And as we know, we will try and leverage on those years of experience for a very exciting conversation today. I've been a very keen follower of the stock markets from age, and right from the days on Dalal Street when we had physical scripts and trading ring and those days. BSE has come a long way, right from introducing the gold from T+5, T+3, T+1. We have the SME segment, we have the BSE startup segment. So can you highlight some of the key changes that have happened in BSE over the past few years? And anything very specific that excites you very much about the future of this exchange?
The stock markets are evolving on a regular basis. If you look at the way in the past few decades how stock exchanges have changed in India, it's amazing. Starting with a sign language and a single place where people used to congregate and trade for just 2 hours in a day and probably settle after very many weeks after that, if at all they settle. Because a substantial portion of them used to go unsettled, either through badla or through objections and whatnot. Compared to that, the first change was making it all online, real time, and at a national level, using a VSAT technology which was never heard of. So from a ring of where it used to get traded, the trading moved to the broker's office with longer number of hours. And from there it moved to the client's office in the form of a EXE and a laptop or a computer, where from people used to trade. And from there it has gone to mobile. And from mobile it has gone to more amount of, customization with multiple softwares coming in. That is on one part of it. The second part of it, from T plus anything as a settlement to today T+1, is another major change that has happened. Some of them are of very recent. T+1 was a very recent change which happened during the COVID and then went up to this year's for implementation. That's on the settlement part. The risk management paradigm has changed a lot. Investor protection paradigm has changed a lot. Today, every investor gets to know every time he makes a trade, the trade has happened by way of an SMS. 15 days he has to get the details from his brokers about collaterals, conditionalities with regard to what can be pledged, how the unpledge happens of client securities to protect it interest. These are other sets of changes that have happened. In continuing with it, the term surveillance today means very many different things in stock exchanges compared to what it was before. The segments in which various products get traded, just being only an equities exchange for many centuries, India today is just not that. In a single stock exchange, you have the entire shopper stop of all the financial products. We name it equity derivatives, currency derivatives, interest rate derivatives, commodity derivatives, retail debt, SME, on and on and on and on, mutual fund, everything in a single place. So that is another major change that has happened. I can be going on narrating a lot of things like this. One important point what we should talk about here is the cyber security and the concerns for cyber security. That has been another major change that has happened in the recent past. So these are some of the noticeable type of changes, and technology has undergone a lot of change compared to what it used to be before. When we talked of servers, it used to be big monolithic structures sitting in big rooms. It used to get heated up. Today we are talking about a lot of sleek architecture. We are talking about cloud computing. We are talking about soon getting AI into our space. Already AI is there very much in surveillance of cyber security threats. So lot many changes in technology has happened in the stock exchange area in the past few years.
Thank you, Sundar. When you said about all that, it just sort of reflects the way the entire industry has moved. I would say the capital market space has moved, and the exchanges being, of course, leading the pack, as I would say. There's another very interesting development going on in the BSE SME segment, and we have seen a lot of interest around that and quite a number of new listings that are keep on happening in that. Would you like to share some details on how this is going to evolve further?
Well, certainly, it's a matter which is very close to many of our hearts. BSE's SME platform was launched somewhere in 2012, which enabled the SMEs to list. The idea was, when you list even in main board or here, it brings visibility to the company. It makes it easier for them to raise money, particularly for a SME that becomes very important. It also brings in a lot of credibility, and also it provides an opportunity to mature to the main board, graduate to the main board, which will be adding to the company's value and shareholders' value. So clearly, we were able to do some good work in SME area, and we fast emerged as the number one platform of choice in many aspects. This platform has provided a lot of opportunities to many entrepreneurs to raise equity capital for growth and expansion. And for investors, it is very easy to identify a good SME when it is getting listed and traded, so that they are also happy about investing. SMEs have played a very vital role in this country in terms of contribution to the employment, contribution to exports, contribution to GDP. It's really huge contribution coming from the sector. Therefore, it is very much important for us to cater to the needs of them. We have around 500 companies listed with us, 452 companies to be very precise. Around 5,500 crores have been raised through this platform. Around 179 of them has already migrated into the main platform. That shows the strength of this platform in helping furthering the cause of SMEs. When we look at this SME platform, to me what it looks like is, while we feel so happy about this 452 companies or almost 500 companies, more listings are happening, I somehow get a feeling that we have not even scratched the surface. Even if you take medium and slightly bigger small enterprises, there are a couple of lakhs of companies in the country which are there in that area. While all of them may not be able to list, having 500 companies and thinking that we have scratched the surface is meaningless. There are specific businesses in many states, very unique to those states, which I don't think we have even tapped. Today, when we are talking about SMEs, it's not actually the real SME type of a company we are talking about. We are talking more about a sophisticated type of SME. Think of the people like, take the case of the state Rajasthan, which I repeatedly quote. What all type of sectors are there in the SME area? Artificial jewelry, gemstones, and also this marbles, different colors of marble in different parts. There are a lot of SME enterprises involved in these businesses. They provide the roji roti or the day-to-day existence for so many families. Have we even touched many of them? I don't think so. Take the case of Tamil Nadu. And one part of the Tamil Nadu, today when we talk of Tamil Nadu, immediately only we are talking about Tirupur and Hosei. Is it what it is? I don't think so. There are specific villages in Tamil Nadu which are very good in wooden carvings, and they are exporting a lot. The many airports you will find a lot of wooden carvings coming actually from those places. Have we even touched them? I don't think so. So take the case of Erode, Trichy. In all those areas, how many auto ancillary manufacturing units are there, which all are qualifying under SME, but we are not touching them. So I feel that there is a good amount of work to be done in this area. While we have made some progress, we have made a beginning. I think it is just the beginning. We might have been doing it for the past 1 decade, but still I feel we have not gotten into the depths of it. I think there is a huge amount of scope for doing more in this.
Thank you. That's wonderful to hear that you just scratched the surface with 500 listings, and there's much more to come. So exciting times indeed for the SME segment going ahead. And obviously, when we are talking of stock markets, Sundar, I cannot help but ask the question on the FNO segment, which has been really a trailblazer in my opinion, where there has been such a big increase in volumes, especially in the currency, stock derivatives. What is the essential change that has come about in the products that are offered, or how do you see what has changed in the investor mindset that this sector has suddenly, boomed on the stock market?
So I presume that you are asking it from two perspectives, one from the entire industry perspective and second specifically from BSE perspective.
Yes.
I am looking at it.
Yeah.
So in India, if you look at it, the equity derivatives is just a 2 decades phenomenon. In 2000, it came into existence. We are in 23 years now. Even as far as the entire world is concerned, if you talk about financial equity derivatives, be it equity index derivatives or stock derivatives, they are comparatively very, very new. CME started with S&P 500 futures somewhere in 1970s, if my memory is right, when Leo Melamed was the chairman of CME. Clearly, the concept of commodity derivatives was very much prevalent for many centuries, not the financial equity derivatives. So that came into existence recently only into the world, and into India it is just 2 decades worth. When we started the product, the initial approvals were given only for index futures in India, and Nifty futures was doing very well. Subsequently, it was index options, then came stock options, and then last came stock futures, because there was a huge amount of fear whether the stock futures would lead to a lot of leverage being used in the market to the detriment of the growth of the market. Subsequently, those fears were allayed and the market started growing. Along with it, the regulatory structure around all this were growing. Futures were very easy for people to comprehend because they are linear products. So there was a good amount of growth in index future, and stock futures started growing very well, because to express a view on a stock, instead of stock in itself, if you go to the stock future and you express your view, there is the linearity which is making it very similar to that of the stock in itself. And the cost is less because of the leverage, as you put only a very small amount of margin compared to the totality, maybe 20% margin, 22% margin, but still you are not spending the remaining 80% as an investment, and you are able to take a view, and when your view comes true, then you exit it with ease because there is a good amount of liquidity. At one point of time, stock futures, probably we were number 1 or number 2 in the world, and we were trading very well. Very many times the friction cost can decide whether the product will continue to go the same way in which it is going or not. There were two things which were aiding futures. One is there was no extra cost to it, and second, it was very simple to understand compared to options because it's a linear product. Then a point of time came when the STT and other friction costs associated with trading in futures started going up, because everything with regard to futures was based on notional, whereas in respect of options it is based on premium being a very small percentage. So that started making options becoming attractive, and the knowledge part of it is never a barrier because people are all very ingenious in understanding any new thing. Options per se are very versatile product. They will be able to help you to do many things in many ways. If you feel that a particular security is going to go up, if it is a future, you will be able to express it only in one way, by buying futures. There are multiple ways and grades and shades in respect of options. When you feel that the stock is going to be going up, you may buy a call. When you feel that the market it will not go down, then you may be going and selling a put. Both are bullish, but the actions are very different. Like this, there are lots of shades. It will be within a range, then you will be doing a different strategy. You may buy a call and sell a call within a range. Or there are multiple things. You can synthesize a future. You can do a box. You can do a butterfly. So many things. And so options being very versatile, to put it very simply, when people start understanding the concept, not only the concept of options, but also the Greeks, when people start talking in terms of theta and vega, and talking about time decay and the volatility play on options, that is when the options market was born in India. Options per se give you much more leverage, are very versatile, and well risk managed and nicely settled in the country because of the regulatory structure. Not only in India, across the globe, the product started trading in a big way. One major change that has happened in India was the weekly option concept to start with. Of course, it is no longer unique for India or anything. It is there in multiple places. But in India, when it started, so one, the SGT is low, the frictional costs are low. Two, the knowledge has already been acquired. Three, it is clearly a short-term contract. Then the attraction to this product became more and more, and you find huge amount of activity concentrated in options in India. This is all for the nation. When it comes to BSE, notwithstanding the fact for 20 plus years the derivative contracts were in existence in India, BSE did not open any account in this segment in a meaningful way till recently. May 15, 2023, after I took over as MD and CEO of BSE in Jan 2023, from May 15, 2023, we relaunched Sensex options on Sensex 30, which is an index very well known to the market. That has caught the fancy of the people. One, it was on a Friday expiry, which is unique. Today is an expiry day. The contract size was made as minimal as possible within the regulatory framework. The index is very well known. It has a great correlation with Nifty, 99.98%, which is one of the very heavily traded indices across the globe. Five, it can be a very complementary product with this Nifty, because of which the brokers started showing a lot of interest. Initially, of course, we had a lot of issues in making a proper environment to be available. What I mean by environment is, many of the brokers were only members in NSE, they were not with us. Yeah. Most of the clients were enabled for only NSE, not for us. Most of the software vendors were not supporting BSE's equity derivatives segment. So all this over a period of time, very swiftly and very neatly, we were able to get over, and that has helped in the growth of the equity rather it is helping to grow the market of equity derivatives in BSE, and we are seeing some amount of traction in respect of Sensex derivatives. It's been a long journey for the country for 2 decades. You can say long journey or a short journey, because 2 decades is nothing in terms of total market's existence. But for a country with a new beginning, 2 decades is not too short a time as well. And this is how the markets have grown. This is how BSE is growing.
Thank you for that, Sundar. I think amazing to hear the transformation that has come about, especially in the derivative segment. There's also, one related point which says that, SEBI report which says that a lot of investor traders are losing also actively. So I guess investor education of the traders, of what they can actually do as per the risk appetite is very important. So how is BSE helping in that, or engaging with the investors on that?
So it's a very, very good question. So the investor behavior could be because of very many reasons. The investor behavior could be a very conscious decision, or investor behavior could be a frenzy because of or the peer pressure, because everybody known to him is trading in option. This fellow also should tell them that he is also good in trading options. That could be one reason. And third most important reason is the versatility of the product, which is what I was repeatedly talking about. If you look at options, particularly the weekly options, around the time of expiry, they behave more like the underlying itself. The non-linearity, because of the shortage of time, or rather the nearness to the expiry, almost transforms itself into linearity at that point of time, unless and until the Vega factor comes in very big way, impacts the pricing. And that point, what happens is clearly the person starts feeling, the small investors starts feeling, the retail investor starts feeling that this is more a small priced equity stock than it is an option. So when you look at it from that perspective, the stock value is very big, whereas the option price is very small, nearness to the expiry, theta decay. Therefore, it makes it very attractive for him to express a directional view on a stock at such a low price. The market is always comprised of three sets of people, in my opinion. One is arbitrager, second is a hedger, and third is a person who takes a directional view. What proportion all of these should be present, it is very difficult for anybody to predict. But having said all this, it is very important for the investor to take a conscious call, not a call because of frenzy or peer pressure. That is where the important point that comes to all our attention is, how do we educate the investor? Honestly, if you see, there are a lot of material today in the public domain, both information and misinformation about anything. The growth of internet and the penetration of mobile and smartphones in India, not only in India, in many places in India in a very, very big way, it has therefore provided avenues for both information and misinformation. In the area of information, are there material available enough for people to understand what options are and therefore take a calculated risk? Yeah, the answer is yes. Are there misinformation which are enticing the investors to think that this is the best product to bet their money on and bet on a direction just because there is a chart or just because somebody is telling? The answer is yes. There are lots of such people who are trying to put ideas into the brains of gullible retail investors to their own benefit. So both do exist. So as a stock exchange, as a responsible stock exchange and a market infrastructure intermediary, what typically we do is we try to do investor protection through our investor protection fund, investor services fund and all. We try to create awareness amongst investors. The investor awareness programs are done both through electronic media and physical meetings. In every year, we do around 13 to 14,000 programs of investor awareness across the country in both these modes. Apart from that, we also join hands with the regulators to talk about the products to the market participants, so that whatever they do, it is with their conscious understanding they do, not because of any frenzy or with lack of knowledge or with simply avarice and greed alone they are acting. So this is the effort from our side that we are putting in. There are also a lot of snippets which we create, small videos which makes people to stand and think. Some of them could be jocular videos. There'll be a lot of comedy around it, but it makes somebody think. Recently, we had come out with a series of such videos called Mane Ya Na Mane. There is a character called Mane in it, and that Mane tries to, very in simple terms, in a day-to-day basis, tell people, if somebody is telling you that you will make money overnight, tons and tons, don't believe it. Don't fall for it. There is no easy way to make money. It's all through hard work only you can make money. So that means what? If you don't understand a product, going and investing in it is not the right way to get into the stock market. So some of these things we do so that it attracts the attention of people, so that they have to halt, think and then go. If they don't, it's like a signal. If you just mindlessly cross, you are bound to get hit somewhere. So that's what we try to do from BSE as a responsible market infrastructure intermediary.
Thanks so much for that, Sundar. I think, as you rightly said, this sort of frenzy of getting into a trading position because your peer made some money. I think that's the most, I would say the most risk that can be caused to an investor, right? So investor education is very important, and I can see on the BSE website also there are a lot of information material which you can access and read about the same. Which brings us to a follow-up area where from the institutional and trading perspective, right? Traders, investors, from trade guarantees, settlement risk, what are the steps that are being taken to make it even more safer for all stakeholders?
So as you rightly put across, one is of course Investor Protection Fund.
Yeah.
Let us take a few steps back. First of all, there is a due diligence on the broker selection process. And there is a continued compliance requirement of brokers, and there is an online and offline surveillance on the broker and also an inspection to ensure that there are only good practices followed, no bad practices are followed. Client securities and client monies are kept safe. All that are done in order to protect the investors. That is one set of a thing. Of course, we talked about investor awareness in great detail to educate the investors. And the investors themselves, they should be of good caliber. Further, there is a KYC process which has its own way of trying to ascertain. May not be totally foolproof, but at least certainly there is an effort to do it. And also, it's not just restricted to, I'm sure it's not just restricted to cash market, equity derivatives. I'm sure you're talking about all products. Yeah, in cash market, therefore, no, we have a very strong surveillance mechanism. If any security exhibits an improper or not acceptable nor not understandable price volume behavior over given periods of time, in consultation and in consonance with all the other exchanges and SEBI put together, joint actions are initiated at periodic intervals across those securities, right from increasing the margin percentage or making them available for trading for limited time or making the settlement as trade by trade to discourage people from trading too much on it and in the process exhibiting an abnormal price and volume behavior. There are stringent enforcement actions both on the corporates. If the corporates are not transparent to the market in providing the data that are required to be provided under LODR, stringent actions are there. The actions can go to the extent of delisting or issuing show cause notice and whatnot. And also the same way, there are stringent compliance requirements which are enforced on the brokers to ensure that they are worthy enough for them to continue as brokers. So this is some of, and apart from that, of course, in social media, TV, everywhere, we all today talk about how it is important for investors to be aware of what they are doing and going about it. Having said all this, greed and fear clearly are two human behavior which many a time defies logic and makes people to get into situation which they should not be actually getting into. It is not possible for anybody to evangelize that greed and fear should be overcome, because it's the innate quality in many of us because of which it surfaces despite all good advice. While the entire mechanism, thanks to SEBI with total orientation towards investor protection, whatever we are doing, having so many investor service centers across the country, so much of effort through IPF and ISF, and so much of effort on the own by many of the market intermediaries and the market infrastructure intermediaries, still there are always stray cases where the investors are being taken for a cool ride. When some cases, when you look at it very carefully, the greed and fear of the investing community is coming out as one of the major reasons for these mishaps. So we have to educate. However much we educate, the investor also should feel the importance of being protected. If somebody wants to throw caution to the air, it is very difficult to protect him. Notwithstanding all this, our endeavor will be to continuously engage in protecting the interests of investors through various means which I talked about, and more will emerge in this area in the coming years.
One brings me to the next question before we get into more on the technology side. One important point which had come up, and we had seen earlier when DMAT and online came in, it was India made such a smooth transition into that space. And I would say it was one of the most remarkable transitions if you compare it to any other market in the world, where I think some of the larger markets still struggle with scripts in physical mode and physical settlement, right? So from there to coming down to T+1 settlement, the movement has been so, I would say very quiet movement into T+1. There's been no noise around it. Yes, we saw circulars and we saw movement. How has that been achieved? Is it just technology or is it something more than that? Would love to hear from you.
No, I think the total credit in this area goes to the regulators. The proactive thought process of the regulators, the consultative approach that they have, the consideration that they give for the problems that the market face and market intermediaries face, and the regular attention to minutest of the detail and getting them cleared and clarified by way of circulars, I think they all have been responsible. Initially, there will be some people who will be adhering to the compliance requirements because of fear, but over a period of time, people do realize the importance of compliance and willingly start participating in this process. The journey has been very smooth. As you rightly said, how easy it has been for India to come into a DMAT mode today. But notwithstanding that there are pain points, it's not that there are no pain points. There are many people today complain that when they want to go on DMAT, they have some procedural problems and all, but they are bound to exist. In an economy of our size and in an economy of such diversity and so many different languages, it's not so easy, but notwithstanding that we have been able to achieve it, I must say that maybe because of the single-minded approach of the regulators in going to the minutest of the detail and prescribing directives for them.
Sundar, it brings me to the probably the last section on some of the technology-related aspects. Right now, I'll be trying and placing some points before you, and feel free to go, in the direction you would want to. We have seen some great things on and heard about algorithmic trading and the use of AI in that. How is BSE supporting that or coming up with new initiatives in the coming years?
It's a good question that you're asking. See, if 15 years before, if you have talked about algorithm, people would have asked, what does that mean?
Yeah.
Right? So 2008, I think SEBI came out with allowing direct market access and allowing algorithmic trading. I very clearly remember how difficult it was at that point of time for the market participants to think that they don't have to place orders. Some machine will be placing orders for them into the system and monitoring it as well and telling them if something goes wrong. See, many of us are control freaks, right? So we want to be very clearly controlling everything. Here, you feel as if there is a lack of control if the machines are placing orders on your behalf. So from that stage, we used to jocularly tell in an algorithm, in a HFT, that is high frequency trading setup, there will be one man sitting, one dog there and one server room. So people used to ask, why the dog, why the man, why the server room? The server will do the trading. The man is to ensure nobody enters the server room, and the dog is to ensure that this man does not enter the server, so that there is no human intervention. So that is what is as a joke we used to tell. So that is how the algorithm trading honestly has developed. For algorithmic trading to develop, there are certain prerequisites. One is a very good understanding of the product. Two is very good price point levels for people to understand the price movement and its behavior, and then devise an algorithm. And for devising the algorithm, therefore, apart from the product knowledge, good technological code writing capability becomes a necessity. All these three are available plenty in India today. So because of the great advantage and advances that we have made, thanks to the demographic profile that we have with the young population, all these 3 points which I made have already been accomplished. The next set of important requirements for this is you have to have a co-location capability. You have to have a capability to put your servers there. You should be able to have high-speed connectivity to the co-location office from your office, and equal and fair availability of that co-location service across members with the exchange. And clearly and very nicely, the regulatory framework has evolved, helping in all these areas. This is the infrastructure part of it. So we talked about product knowledge, and then the price points availability and the technological capability to write codes. Second, we talked about the infrastructure that needs to be available for this to be made into get into some form. Third important thing is people writing an algo and getting it approved by the exchanges. So there has to be a framework for understanding what the algo is. To whatever extent that it could be shared, only it will be shared. And based on what is shared, how to see that it is a okay algo to go or not so okay algo not to go. So all this have also been put in place thanks to the regulatory framework. So now you have all the things, that ingredients that are required for this. And there are a lot of young traders and knowledgeable traders coming into the market who are able to use this. So that's how the algo trading progressed in India in a big way. And I'm told that around 55% of the trades that happen in India today across stock exchanges are coming only from algo trades. So what is that BSE has done to support it? BSE has a world-class colo service, which we provide our co-location services to all people in a fair and equitable fashion, with connectivity to NSE as well being provided, which helps in members keeping their servers in our office, which houses the algorithm, and it trades fast with the exchange. When people trade fast, there can be too much of order generated, which could be a noise instead of a sound. So clearly a regulatory framework to prevent noise coming out of algorithm is also in place, which is another healthy requirement for a healthy development of the market. BSE clearly adheres to those standards, and also the algo approval process needs to ask the right questions, but at the same time it should be fast enough and friendly enough for the market. We have done everything which is in our control to ensure that the algorithm approval process is simple. The price points are all provided to the investors so that they decide how they should write their algo, and the approval happens. Colo is world class, and the cost is very, very cost effective compared to my competitors and other peers in the industry. I think BSE is one of the lowest charging exchange in the colo space. That also helps people to acquire. So this is how, in my opinion, algorithmic trading has developed in India, and BSE has contributed for it.
Yeah, thanks, Sundar, for that. That's very insightful, and I'll keep reading about this algorithmic, though, we have heard from a lot from the broking community on this, and as you said, the new age traders, brokers, many of them are talking about this very actively. I leave you with a last question, which is around, technology is evolving. There are changes rapidly happening in the banking and capital markets world. As one of the leaders of such a large stock exchange, what are you looking for in the future, which would help you in terms of technology or growth? What are the key things that you're looking at or expecting that to change?
So, what we talked about SME, and we said we have just scratched the surface. That is probably true even in conversion of financial savings into capital market savings.
Yes.
The household saving rate is very high in India. During COVID times and all, it went much higher, but it is around 50-55%, I think, fairly it is easy for us to accept as a household savings rate. From that household saving, how much comes into the financial market? Substantial portion would be coming, is my guess. There are numbers available in public domain, of course, with lot of caveats. But a very great portion of that saving from the financial assets goes into things like gold and all. And some amount of household savings also get diverted into real estate. So the real estate used to make a lot of sense in the past because of the capital gains attraction. Slowly that is waning down. Particularly in respect of residential properties, it is no longer interesting for you to have a second house because the rental income is very abysmal. One house itself, many people have started thinking, why should I actually own? Why I should not be continuously renting? Because then I am better saving my money. Probably I should put my money instead of into a house into some other place. That is evolving. In a growing economy, when many of the people are just slowly increasing their capability to their status in their life, financial status in life, fixed deposits play a very important role. Because it's very easy to open a fixed deposit account. It gives clear return, which is understandable. There is no need for any great intelligence to understand the concept of FD. If there is an important and immediate need, it can be highly liquid. Go to the local branch and say that I want to break my FD. It works easily and seamlessly, and you get the money probably in 20 minutes, half an hour, 30 minutes, or whatever it is. So given that there is a great attraction for FDs, therefore the good amount of money which is coming into financial savings is going into fixed deposits. But that trend is also changing. Today people are more looking into debt investments. Corporate bonds, for example, if it is AAA and very good liquidity is there, and there are a lot of brokers who provide liquidity for this, for some premium. It is same as that of FD, but is better than FD in terms of return. Of course, if it is a AAA rated company and it's a good company and very well vouchsafed, there is no much great worry for an investor in getting into a corporate bond compared to a FD. So that is one change that is happening today. And people are more and more getting into mutual funds, which is a good sign for people to see. See, if you look at BSE, from the year 2018 to 2020, the number of investors growth was 18%, and we had some around 5 crore investors with us, 5 crore UCCs. From 2020 to today, there has been an additional incremental of growth of 9 crores. So today, which is 176% if you look at it. And today I am having 14 crore investors with me. Many of them are all into mutual funds. There is a good, every money put into the mutual fund ultimately finds its way into the market, either into the equity or into the debt market, which is again a good sign to come. So I feel after having 14 crore UCCs does not give me any confidence for the country of our size. And more so when we are talking about 60% of the population are in the age group of 20 to 60 years. We are not making any great service there. There is a huge amount of area to be covered. In the 9 crore incremental investors that came into my books, the UCCs that came, a very interesting data point is that 86% of them are less than 40-year-old. 14% of them are less than 20-year-old, and the balance 36% or whatever it is in between are 20 to 30 years. So that means young investors are coming in. So clearly, therefore, what it looks to me is there is a good amount of work to be done in being inclusive. When you talk to people, and the mindset is also that men means investment, women means changing diapers, cooking and all. You look at any media, advertisement and all. If it is some cooking, it will be the woman who will be cooking and the husband who will be praising the food cooked. You will never see the other way around. 1 or 2 advertisements of a man giving a cup of coffee to a pregnant woman may be seen. Whereas that is more of a service during a specific time when she is pregnant probably, not as a regularity to go and cook and offer, and that will not be eulogized in any advertisement. And similarly, if it is driving a car and telling that the car is good, it will be the man who will be driving and certifying that the car is great. No woman will be seen as driving. So if it is investment, with all the conditionalities, this is subject to this risk and all, it will be a man who will be investing. There is a clear gender bias which has to be overcome. So what am I telling in all this? Sum and substance is, there is a good amount of participation that needs to be brought in from our women of the country, because they all are earning today. It is not that all women are sitting at home and cooking for their husbands. They all have their own lives, and they all express their knowledge and capabilities and wisdom by securing employment, and they are doing extremely well in corporate life, and many of them are self-employed. They also should be helped, taught, advised, and handheld in making their own financial decisions in investment into the market in a risk-free way which suits their requirement. So there is a huge potential there. And when we are talking about 14% of the incremental investment is incremental UCCs are coming from people aged less than 20, that means we are talking about a huge potential to expand in our country of our size. There's another area where from I think this is emanating. Technology is changing. As you rightly said, AI people are talking about in multiple areas, including algorithmic trading and whatnot. And we are talking about cloud computing. We are also having on the other side cyber risk and cyber concerns, and there are a lot of jobs coming because of this, and a lot of people specializing in all this. So these are all avenues and investments which is going to shape the industry in the years to come. To put it very simply, I feel there is a long way to go for India in many of the areas, though we are number one in many areas. In terms of number of trades, the number of investors, number of listed companies, the F&O volume, India is probably the number one in the world today in many parameters. But I feel notwithstanding we being number one, there is a huge distance for us to travel. The pace of which we are growing in India, the way in which we feel that we are in a situation where a very good sweet spot, where from we are going to grow in a big way. We are talking about 5 trillion, we are talking about 37 trillion and whatnot very soon, not too distant in the future. With the growing and budding young population in this country, with the type of demographic profile that we have, I think there is a huge amount of growth that is going to come in terms of investments into the equities market, capital market, basically from women, from youth in new areas. What we as market infrastructure intermediaries should be doing, and we are doing, is to ensure that we have technological capability, think tank capabilities, knowledge, a good regulatory framework which is in any case being provided so nicely by SEBI. We have to ensure, and we are trying to ensure and continuing to ensure this for the market. I think this is the way in which I feel the market will grow.
Thank you, Sundar, for that. That's very nicely captured and encapsulated in those words. I think it's been an absolute pleasure talking to you for the past 30-40 minutes. And we would like to thank you for your time and presence in this forum. Over to you for your final words.
I have just one word. Thank you for this opportunity, and all the best to all the investing public.
Thank you, sir. To our viewers, in the coming episodes of Inspiring Better Banking, Wealth Amplified, we'll delve into a range of topics in the capital markets and wealth management space, and also talk about the role of technology in this particular domain. Stay tuned for more interesting interviews coming your way. Thank you.